Prabhat, for half a century, all top institutions in the world, from World Bank to Wharton School, promoted microcredit as a tool to bring people out of poverty, quote unquote. Do you really believe in this narrative? Back in the 1990s, when I got my first credit card, I overspent and suffered. I saw people borrowing from one credit card to repay another and ending up in perpetual indebtedness. I saw credit card recovering agents coming, abusing clients, and extracting their pound of flesh. I also saw people creating rakas to escape repayment of high cost debt. In some ways, I find a similarity with microcredit operations. People are borrowing from multiple lenders. Same set of women fronted by men are borrowing in repeated cycles. I see people awaiting political intervention to escape the repayment. It happened in various parts of the country, from Andhra Pradesh to Assam. I would like to know why microcredit in its present form is different from private money lending. Don't you think it is time to review and redesign this activity with an eye to offer cheaper loans? Over to you.
Thank you, Pradeep. And that's a great question. And especially as I look back at my own journey in microcredit, microfinance for over 20 years in India. And in early times, I was supporting programs to help support small grassroots, nascent NGO microfinance institutions, which were just getting started in the world of microcredit. And if I remember the kind of things we were really concerned about at that time, it was about a desire to help people come out of poverty. It was a desire to empower women, organizing them into self-help groups and all of that. But also realizing and recognizing that rural communities, women and farmers do need injection of external credit. Because if you look at the rural economy, it is credit starved. If you look at the credit to deposit ratio across different states in India, you will find that in more developed states, whether it is Gujarat or Karnataka, the credit to deposit ratio is over 100%, which means that for every 100 rupees saved by the people over there, they are getting credit more than 100. On the other hand, in the least developed states in the country, where you look at Jharkhand, Bihar, Orissa, you'll find the credit to deposit ratio is often like 30%, 40%, 50%, which means that for every 100 rupees saved by the people, actually they're getting less than half of it back as credit. So those areas are credit starved, and hence there is a need for microcredit. Now, with that purpose, microcredit movement started, microfinance movement started, and we also started working on linking these self-help groups and microcredit, microfinance institutions to mainstream sources of capital. And when those partnerships started happening, we were actually very happy that finally the mainstream credit is finding a way to meet the needs of low-income people, women and farmers in the less developed regions of the country. And we saw that, and we believe that it will help people move out of poverty. That's your fundamental question. Subsequently, and this is not like anything recent, as far back as like 2008, 2009, 10, there have already been studies which indicated that microcredit is a good tool which helps people manage their cash flows. It helps some of them start new enterprises, new economic activities, but microcredit by itself, microfinance by itself is not sufficient to lift people out of poverty. So a number of rigorous research has established that. Now so it was important to recognize that limitation of microcredit, microfinance. For getting out of poverty, people do need access to a much wider range of services other than credit itself. So if you're thinking about a farmer or a rural women entrepreneur, besides credit, they also need things like cash flow management, banking services, payment services. They also need digital and financial literacy so that they can take advantage of the various schemes and policies that the government has set up to benefit them. And most importantly, they need the skills to set up and manage and run enterprises successfully, and they need access to markets. Unfortunately, microfinance institutions are not equipped, not geared to provide all of this. And also, you cannot load all of this agenda onto microfinance institutions. They're not government. So if you look at them as a business organization which is delivering one service, which is microfinance, and they're doing it well, to say that they are not lifting people out of poverty is kind of asking a little bit too much. Now, it is not to question the need for such services in order to lift people out of poverty. People do need those services. The question is, who can and who should provide all of that to low-income people? Your other part of your question was, how are microfinance institutions different from money lenders? Yes, they are. They are very, very different. In case of money lenders, you and I know it. They will never write off a loan if a client fails to repay. They will find a way to recover that. Microfinance institutions, and particularly after being regulated by RBI, over last 10, 15 years, whenever there's a microfinance crisis for one reason or the other, they would write off loans, right? They would write off because it cannot be recovered, and they will not go and use illegal practices and means to recover money. So that's one. Secondly, microfinance institutions, what they will also do is they will form things like joint liability groups or self-help groups, and use these groups as a mechanism to provide that another layer of safety and preparation for the clients. So that's another way microfinance institutions are different from money lenders. Thirdly, in terms of the client base that they serve, so money lenders will not give loan to anybody and everybody, and sometimes they will if you just give them some kind of a collateral, like pawn your gold with them, or give them your land title. So in case of microfinance, if you see that the current outreach of almost 6.6 crore unique borrowers as of 2024, then they are really serving a much deeper, much larger segment of population. So in that sense, I disagree that microfinance institutions can be treated as same as money lenders. They are different. They are serving larger population, and they are under regulation in many ways, much better regulated. But yes, I mean there are challenges that